You know, this stock is falling. It has gapped down today. So, all right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you guys about a company called the Tattooed Chef, stock ticker TTCF. We've covered this several times on the channel over the last 6 or 8 months, and I wanted to revisit it because there's some stuff going on. This is a small cap, high growth stock. These are the types of stocks that we cover on this channel. So if that's content that you're interested in, please do us a favor and subscribe to the channel, hit the notification bell, and if you enjoy this video, please smash the like button. Also, any thoughts or comments that you might have, please drop us a comment below. I read all the comments. I respond to many of them, so I enjoy that and I appreciate your feedback. Okay, let's get to the Tattooed Chef. All right, we're in the middle of the trading day right now on Monday, January 24th. And at the moment, the Tattooed Chef is down 9.6% on the day, and it's at $11.40. But if you look down here, you will see the days range and the 52-week range. Today, this got down to $10.89. That is its 52-week low. This stock was trading nearly at $26 at one point in the last 52 weeks. It's been on a dramatic downturn, as have most of the small cap high growth stocks. This is a stock that's been on my watch list forever. It's hit its 52-week low again today, but it didn't just hit it today. It was already at its 52-week low, and it's taking it out by 9 or 10% here. So this brings the Tattooed Chef with a market cap now under $1 billion, $911 million. So it hasn't been in that territory since it was a SPAC. So this is almost, when we get to the charts, you'll see this is almost historic lows, especially down here at $10.89. All right, so one of the things I want to show you is there's really not that much news that's been generated on this stock in the last 3 months. So when we get to the chart and you see the price action that's occurred, it's not occurring off of news. This stock is getting dragged down. The market, as you all know, is getting dragged down. The small cap high growth are getting wrecked. And the Tattooed Chef is just getting dragged down right along with everything, in my opinion. I don't see any fundamentals changing. I don't see any reason, when we get to the chart, you'll see, I don't see any reason for this stock to be doing what it's doing. Having said that, you know, where's the bottom? Let me show you what's going on. So they reported earnings on November 16th. They missed their top line revenue. So the stock took a hit in November, a little bit. And it had already been going down, trending downwards since then. Again, not for any reason that I can see, because this is a high growth company and I think they're performing very well. Since then, they've had 2 announcements, a new chief operating officer, so that's a major member of management they swapped out back at the end of November. And then since then, the only other real news they've had is Tattooed Chef completes acquisition of Belmont Confections. So this is another acquisition, and this is a part of the Tattooed Chef's strategy. They are looking to grow and expand both through their own products and through acquisitions. So they have done, this is the second major acquisition they had. So that was 2 in the year 2021, and they plan to have more to come in the future. So if anything, you know, this is probably good news. Okay, I just want to go through a few brief highlights from their investor presentation. I don't want to get too bogged down, but let's just talk about what these guys are doing and what they got planned. Tattooed Chef has a broad, on-trend product portfolio for every retailer. So what they're saying here is 2 different things. They've got great tasting and plant-based options for every meal. Entrees, breakfast, smoothies, vegetables, pizza. So they're covering all the bases with this. They also have vegan, vegetarian, gluten-free, organic, meatless. There's a massive movement towards plant-based foods. Okay, so here they talk about Tattooed Chef has significant opportunity for growth. So today they're saying they're in the frozen aisle, and I think they have 73 or 75 SKUs right now. They've got 200 plus more SKUs that they're planning. They plan to be in the grocery aisle and the refrigerated aisle, not just the frozen food aisle, which is where they are right now. And then they talk about beyond just what they're doing in the grocery store, and this basically gets them in all the major sections of a grocery store. They're saying new channels, food service, college and universities, convenience stores, which they're not in right now, drugstores, dollar stores. International opens up the rest of the world potentially to this product, and then licensing. You can see this is a high growth company. They're an aggressive company, and they have a lot of growth planned, a lot of different ways they plan to grow. So to me, this was the important slide in their presentation. Then they just give some highlights. So overall revenue growth Even though they missed top-line revenue versus estimates, you'll see the third quarter was still excellent. Their total revenue growth was 49% year over year, but much more importantly, their established brand, which is the Tattooed Chef brand, that year over year sales growth in the third quarter was 72%, from $60 million to $104 million. So 72% year over year in the third quarter. We're expecting them to do that quarter after quarter. And they make a little note here, no investment in marketing and brand until 2021. So this past year was the first year they even started marketing their own brand. So they are just at the beginning of this journey, and you can see they're making great progress. They talk about strong resources, $130 million in cash, 315,000 square feet of manufacturing, and opportunity for strategic mergers and acquisitions. So we talked about that. Okay, so quickly, they went from in 2019, they were in 1,600 stores. In 2020, they got that up to 4,272. And now it looks like by the end of 2021, they were in somewhere around 14,000 stores. So they have massively expanded their presence. So a lot of that 2021 growth in the number of stores that they were in are going to show up in 2022 sales. So that, I think, bodes very well for the coming year. Here's a list of some of their retail customers. Here's what they added. They added some big names in 2020. Walmart, Sam's Club, Costco, Target, Trader Joe's, Aldi's. Those are all gigantic names in the grocery industry. 2021, you can see they added even a lot more. Some very big players. And regionally, depending on where you are, you'll know some of these names or you won't. Okay, with all that said, let's take a look at the chart. I'm looking at the 4-hour time frame right now. So each one of these candles represents 4 hours. So this chart takes us back to August and September of 2021. But I'm going to try to focus on November and December and January. On September 2nd, this stock was trading over $25. So from there, it trended downward all the way to here is the middle of November. You can see this E right here that I've circled. That was their third quarter earnings. So I want to talk about from that day forward because that's really the last significant news event that's occurred for them. So you can see that going into earnings, the stock was rallying. It was up to almost $19. Again, they missed their top line, which is revenue on earnings, so the stock took a little bit of a hit. And it was trading down in the $17 range. Since then, it was bouncing between $17 and about $15.50, and it stayed there all the way really to the end of the year. This is December 30th, and it's still, very close to $16. So since January 5th, which was the beginning of this year, there's been no news at all on this company. So it's not trading on a change in fundamentals. It's not trading on news. This is just getting dragged down with the overall market. So just in the month of January, which isn't even over yet, this stock is down over 25%. So to me, that 25% down has nothing to do with the Tattooed Chef. It has to do with a very difficult market that we're navigating through right now. The NASDAQ was down almost 5%. It has rallied back significantly, so I don't know if we hit a local bottom here today and things got washed out, or if there's more downward side to come, because you can see, since September, this stock's pretty much been on a downward trend, as has almost every single small cap high growth stock. I've been doing a series called Stocks on My Watch List at their 52-week low, and unfortunately it's turning into a very long series because most of the small cap high growth stocks are at or near their 52-week low, and it's spreading beyond that. Now some of the large cap and mega cap stocks are at their 52-week low. So I guess my point is we don't know when the bottom is. So to me, this is a great buying opportunity. This stock is clearly oversold in my opinion. And again, none of this is financial advice. You guys have to dig into what I'm saying and do your own due diligence and make your own buying decisions. But from my perspective, so I'm just giving you my opinion, I believe that this 25% has gone down in January just represents the stock being oversold. And I think it was already oversold in my opinion even prior to that. The question is trying to pick a bottom. So this stock is falling. It has gapped down today. So, even though it's hit its 52-week low several times recently, this extra gap down of 9 or 10% to me represents a really legitimate buying opportunity. I've drawn a line here at about $10.61. This traces all the way back to the middle of 2020 when it was still a SPAC. So this is an extremely long line of support. This is going back a year and a half or 2 years. So to me, they're getting very close to that. They were at $10.89 today. They're now at around $11.44. So I'm viewing this as a good buying opportunity. Could this go lower? Absolutely. Stocks have been beaten down to numbers that make no sense to me at all. So there is no telling where this is going in the short term, right? It could take out its line of support. Almost every other stock I follow has already taken out its bottom line of support. So again, for me, this is a very long-term buy and hold. So this is a dollar cost averaging strategy one, in my opinion. And sitting here gapping down 9 or 10% today at its 52-week low. For me, if I'm going to buy in, this seems like about as good a time as any to jump in. So I do understand there's definitely more downside risk. The market may continue to bring some more pain. I don't know that we're done with the overall market, and this is just absolutely trading along with the market right now. And it will probably do so until it announces fourth quarter 2021 earnings. And again, depending on what happens there, that's short-term stuff. So if that doesn't meet the investors' expectations, there could be another buying opportunity there. But I do feel that in the long term, with the plans that they have, the acquisitions that they've acquired, this is a company that's planning massive growth. Management seems very aggressive about continuing their growth plans. So I have been a fan and I remain a fan of the Tattooed Chef. Again, you guys got to do your own due diligence and make your own buying decisions. But those are my thoughts on the Tattooed Chef for now. So thank you very much for watching, and we will see you in the next video.